Hey, what's up? It's Sims BWS back again with another video. So today, guys, I'm going to be showing you the very important aspect of trading. Okay, before any technical analysis, before anything that you need to learn, like obviously not before the basics, like what is a pip, okay? But anyway, so like the very important thing that you need to know before learning any other thing is to have a plan and some rules. Okay, you can actually learn technical analysis and everything before you can actually find a system that works for you. But before you actually want to trade on a real account, that's what I'm trying to say. Okay, sorry, I was trying to say before you actually want to trade on a real account, you need to have some rules. Okay, you need to know the rules, how to play the game. You need to know the rules to play the game. Okay, let's go. So today I'm going to be showing you my own trading plan. So I know like everyone on this YouTube will be telling you that a trader should have a trading plan and a trader should do this and that and that and that and that. But there are a few people who actually walk you through their trading plans and show you how they actually trade and how they actually follow the market. So that's what I'm going to do for you today on my channel, because this is going to be the most transparent channel that you're going to get on this YouTube. Okay, so I'm going to start step by step growing with you guys, and later on this video I'm going to be showing you how you can actually practice on FTMO as we start our channel to get funded. Do you remember on the first video? So okay, without wasting enough time, let's get into the video. So guys, today I'm going to walk you through my trading plan. Okay, so this is how I would trade. Like this is the rules that I'm following. This is the rules that I made for myself. I didn't copy any this trading plan from anybody else. I just crafted it myself. I had to figure this out on my own. So okay, before I get into it, guys, can you please smash that like button and smash the subscribe button? Okay, so let's go. So the first part on my trading plan is to show me what I have to do when I'm trading, like what should I do and what I shouldn't do when I'm trading. Okay, so the first part says 5 things to stop when trading. Stop analyzing and focusing on many pairs. Put most of your time on the dollar index and the cable. Okay, so the reason being the dollar index and the cable. The dollar index give me the bias of where the US dollar is going. So when I analyze the US dollar, I usually also check on the other things like the cable, the Euro USD, the USD JPY, just to see the bias of the US dollar, where the US dollar is going. But I actually trade the cable most of the times. So nowadays, because I have a community and everything, I didn't have a community when I wrote this trading plan, but now because I have a community, I now actually look at different pairs, like a lot of pairs, but I don't actually trade them. I just look at a pair, find the setup, and I just post it to the community, and then we see how it goes from there. Okay, enter a maximum of 2 trades a day and a maximum of 1 trade a session, and always use proper risk management. This is simple. On a session, like on a London session open, you're analyzing your charts, you're looking at probably 1 or 2 3 pairs, because if you're an amateur and if you're a beginner, you shouldn't be looking at more than 5 pairs or 10 pairs. That's if you're not back testing. If you're on your demo trading account and you want to record your trading performance and you want to test your system, you should actually at least, I'll advise you to trade at least 3 to 5 pairs. So, and then on the London Open, you just enter 1 trade and see how the trade goes, and then on another session. Okay, so the maximum of 2 trades a day. You can actually enter 1 trade or you can actually enter 2. That depends with you. So never chase the market. If there is no setup, do not take a trade. Stop being unrealistic with the results and use a proper risk management plan that will help you grow over time. Okay, so this is simple. Never chase the market. Like if you don't see a setup, if your setup hasn't like come to you yet, if the market hasn't come to your zone yet, please don't stop chasing the market. Don't chase the market, because there is nothing good that is gonna come out of that. Okay, except blowing your account. Okay, being unrealistic with the results. So being unrealistic with the results is you like trying to put a lot of trades on 1 trade, like piling up a lot of trades, over leveraging on a position, and actually putting a take profit that is very far from like a very very far take profit. That is very far, like I don't know what to say, like that is very huge than your account. That's being unrealistic. Like using a very far take profit while your account is very small, that will lead to a lot of frustration, trust me. Stop putting your emotions on the chart. The chart has no feelings, and you should use proper risk management for a peace of mind. This is the best one, because that's why I highlighted it with a Bowden and capitalities, and I didn't even have 5, but this thing is just 2 in 1. Okay, so it's a 2-in-1 concept. Stop putting your emotions on the chart. The chart doesn't have any feelings. Okay, so this means, like, if you are emotional or have any emotions towards the market, then you shouldn't be trading these charts. You shouldn't be on these charts, because whether you have fear, whether you have greed, whatever emotion that influences you on this chart, if you have it, then that's a problem. It's going to be a problem, because the market is going to crush you and it's going to break your heart 1,000 times, okay, into pieces. I'm sure there ain't no girl that is going to help you. Okay, so you should use proper risk management for a peace of mind. What this means is, if you enter a trade with the proper risk management, with the amount that you can afford to lose, then you wouldn't be worried and be a screen junkie looking at the screen every day, because the market might go an ounce against you, then you blow. That's not good for you. So next to the next segment, 5 things to do when trading. Record all your trades and start serious notes on the trading journal. Okay, and start writing serious notes on the trading journal. Write reasons you are taking a trade, how many drawdowns you took, and the results of the trade. Okay, so you need to write all your notes, like contemplate on every trade that you're going to analyze. That's why I said you shouldn't be having many pairs on your watch list, so that you can be able to actually follow through all of those trades. Record all your trades. Record why you're entering, when are you going to enter, when are you going to enter the trade, when did you enter the trade, when did you get out of the trade, why did you get out, where are you going to get out, where are you anticipating to get out, how much drawdown did you have on the trade when you took the trade, so that next time when you're checking trades, you are going to be actually comfortable in with the drawdown and everything. Always calculate the RR before entering any trades. If you are risking $100 on a trade, you should calculate the right low size to enter a trade. Have at least 3 confluences to enter a trade: supply and demand zones, market structure shift, market cycle, etc, etc. So always calculate the risk management before entering a trade. It's very simple, guys. If you want to risk $10 on a trade and you have a $100 account, how are you going to do that? How are you going to make sure that you are risking exactly $10? So which means you have to know how to calculate the pips of the stop loss. You have to know how to calculate the pips of the stop loss. And then if you calculate the pips of the stop loss, then you have to know how to calculate the right low size. There are actually apps that you can use to calculate your low size on the internet. You can just Google it, my FX books and other things. I'm not marketing this stuff. Focus your attention. Avoid social media traders and everything that clouds my trading results judgment. Okay, so I usually avoid being on social media, watching these stories of YouTube gurus or trading gurus trying to show us all these profits. Those things, like they cloud your judgment. They want you to like push yourself to make the impossible things that they're doing, and then the end result is going to be blowing your market, like to be blowing your account. The end result will be blowing your account, no cap. So you have to stay out, and then you focus on your attention, like stay out of the social media. Just push, like read books, like the books of psychology, like read trading psychology books and everything, but just avoid being on social media when you're trading. Expect it to be challenging, but worth it. Okay, so this is a very important statement. It doesn't go with anything like 5 things to do when trading, but it deserves to be here. Expect it to be challenging. Okay, so you should expect the market to be challenging, because it's going to be challenging. It's going to be frustrating. Like actually learning to do this stuff, actually being disciplined. Okay, no one likes to be disciplined. Okay, so being disciplined is actually going to be challenging for you to be consistently profitable and to get funded with profit. Have a reasonable daily target to avoid over trading and greed. Okay, so when it comes to daily targets, this is a very important one, because if you have a daily target, then you actually know how much you're going to be risking for the day and how much you are targeting to make on a day. If you actually make 10 bucks, if you want to make 10 bucks a day, which is fine when you are living in Zimbabwe with this, with the, what do they call it? Okay, whatever it is. Like if you're targeting 10 bucks a day, which is good, don't actually want to overtrade and make 20 when you've already made 10, because that is not going to be good for you. Okay, so let's go to the next stage, how to trade. This one should be how to trade. Okay, so never chase trades. The market is 1000 more opportunities. A missed trade is better than a loss. No FOMO. What this actually means is, never chase trades. The market is 1000 more opportunities. It's actually very simple. I don't have to explain it to you guys. There is never a perfect trade. Stick to your RR and manage the trade RR. Okay, there is never a perfect setup. The setup that you think is very perfect for you is going to be the setup that blows your account, and this happens all the time. So in every trade that you're going to be involved in, use proper risk management and ride on the trade nicely. Like, follow your rules. Okay, always preserve your capital and use a calculated risk on every trade you take, and journal it on your trading journal. Record your trades. Okay, we've already talked about recording your trades. We don't have to talk about it again. Have at least 3 confluences that align with high time frame, structure, and order flow to enter a trade. Follow your strategy. So before you enter a trade, you should have at least 3 confluences that confirm with your system. If you're using price action, then you should know that you'll be looking at heads and shoulders, double bottom, and whatever, whatnot. Okay, so number 5, take note more than 2 trades of different instruments a day to manage the greed and the eagerness to trade. Discipline. Okay, like I said before, discipline is very important. So these are the rules. These are my rules of trading. Trade only on London and New York session. At these sessions is when you enter trades. Wait for stop hunts when the market session opens and look at what the structure is doing. Never rush to enter trades. Times to trade. Okay, this is very important. So like, I marked out these things from the start. Like I said, no FOMO. With this statement, no FOMO means no fear of missing out. Record your trades. Follow your strategy. Discipline. Times to enter your trade. Okay. Never over leverage on any position because of greed and FOMO. Never trade if you are not emotionally well or when you are under stress. Never trade with your emotions and accept the profit losses that comes with trading without being emotionally attached. Emotions. Okay, so this is very important. This is a very important statement which says, never be emotionally involved with these markets. Never trade with emotions. Just accept the profits and losses that come with trading, because trading, you're going to have losses, you're going to have profits. Okay, but it's never going to be always blue on your screen. There are times that's going to be red, and they are going to be losing streaks. Like this past week, I'm just in a losing streak right now. Like I'm saying it in front of you, and I'm proud because I trust my system that it's going to get back to a winning streak again. Okay, market cycle. Our confluences, use at least 3 confluences. Market cycle. Okay, so these are all my confluences. Can you imagine, guys? I have about 6 confluences, which I just need to have at least 3 when I'm looking at a trade. Okay, so my confluences will be market cycle. First thing that I'll be looking at is the microcycle. Consolidation, expansion, retracement, reversal. If I see this, then I know that the market is to, if I see the consolidation, then I know that the market is to expand. Then the market is to retrace. Then we're given a reversal. And then the other thing I'll be looking at, market structure, break off structure, market shift, wyke off occurring at my POIs. Okay, this will be my second. I'll be looking, after I see market cycle, I'll be looking at market structure. Where did the price broke structure? Where did the price shift? Where did the price expanded to? When are we retracing? Now we are retracing. And then I'll be looking at supply and demand zones, imbalance. Some call them FVGs. breaker order blocks, and mitigations. So like I'll be looking for price to mitigate either supply and demand zones or imbalances or breaker blocks or any other thing for me to confirm my entry, and then be looking at the Wyckoff on my POY. Premium and discount and premium zones, flip out the discount and premium zones like you saw on the other video on the YouTube, on my YouTube channel, when I showed you how you can actually plot out your Fibonacci tool so that it can show you the discounted zones and the premium zones. Session open, check if the session you are trading has been open. Okay, this is very important. Okay, some of the people don't mind about sessions, but there's this other thing that you should know. When the market opens, that's when most of the liquidity is going to be in the market, and then that's where you would want to be involved in the right direction, of course. MentFX block, take account of the MentFX block being traded through. Okay, this is the MentFX block. I trade also the MentFX. I've been mentored by MentFX on YouTube. I didn't sign up for the mentorship, but I call myself a mentee because I've been following everything that he's been teaching me on YouTube. Market cycle conditions, market conditions. Sorry. Which market conditions are you going to be trading in? That's very important. You need to know which market conditions that you are going to be trading in. Trade on the London Open and New York Session Open. And when the price taps into your supply and demand zone, showing a change of structure and market structure shift, then enter on the second entry or aggressive entry on that POY. Okay, so these are the market conditions. This is just an example of the market conditions that are trading. Do not trade where there are high volatile news and they can affect your outcome when trading. I don't trade the news. I just watch them and see. If I'm in a trade when there is news coming, then I don't have to worry about it. But I don't actually want to get involved in the market, like enter a trade when the news are just being opened or before the news or anytime after the news. Okay. Trade when there is high volume in the market. Do not trade inside consolidating markets and market gaps. Okay, so I don't trade when the market is consolidating. On a range market, I'm going to be showing you market structure on my next videos and show you what I mean when I'm saying ranging markets, bullish markets and bearish markets. So I don't trade ranging markets. I just wait for price to break out of that ranging market and then give me a position to enter. Okay, so these are all the rules, and this is my trading plan, guys. This is how I displayed it. Okay, so you can edit it how you want, you can copy it how you want, you can actually start your own trading plan and figure out what you are, like how you trade, how you want to trade, when you want to trade, what's the most important aspect to trade. Okay, so like I want to go to, okay, so if you're actually, basically if you're using this trading plan, which means you are well equipped, if you have a properly working system that you have back tested, and then you've back tested it on demo account and a few times on a real account, then with the trading plan like this, you are well equipped to actually approach the markets, and then you can actually get funded. So you can actually go to actually try out whether you are able to get funded on FTMO or any other broker. So let me show you something. Okay, so as I am also on my road to getting funded on FTMO, I'm actually trading real accounts right now, but I haven't been funded. So I'm on a journey to getting funded. So this is one of the accounts that I've been practicing on. If you go to ftmo.com, traderftmo.com, the good thing about FTMO is it offers you a free trial to actually test yourself whether you are ready to actually fund your money and practice to get funded. Okay, so this is how it looks right now. When I was saying that I was on a losing streak, I was actually saying the truth, because this actually reflects these are the same trades that I took on my real account, and are the same trades that I took on the FTMO. Okay, So I actually went to losses about 2000 something in losses, 2600 in losses. And then I just hit one trade that actually put me here. I don't know, I think somewhere here, or I don't remember, but I just hit one trade that put me at just above break even. And then, so this is how my metrics look like. I've been I took losses, I took losses. It has been, I was losing a lot until this trade. This was the Euro JPY trade, the Euro JPY trade, and which one was this? This was the US 30 trade that I took yesterday, and this one is the losing trade, the Euro USD trade that I just took today. I actually lost. So this is how my trading plan looks. I haven't failed or anything. I'm just not. I haven't failed. Like I haven't broke the losses, the maximum daily lows, the maximum lows. I haven't broke any of the two. I'm just I'm just practicing on a 100k account. I'll be looking to fund myself with a 100k account when I'm getting funded with FTMO. Okay, so you can just go to FTMO, and then you create an account, and then you actually apply for a free for a, for a free for a free trial. You just come in and then you click try for free, but it won't work on me because I already have a free trial, so it only accept one free trial. Okay, so let me just go down and break down the trade that I took on Euro JPY that actually brought my account back from the losing streak that I was in. Oh, so this is the Euro. This is the Euro. This is the Euro JPY trade that I took the other day. So this is the 4 hour time frame. I'm not going to go deeper on this trade. I'm just going to show you what I was looking at when I was actually trading these markets. So I marked out this as my trading range, as I am trading inside this range, and now price just tapped into my supply. I'll be looking to see how the price will react on the supply right now, as it just tapped into my supply. But this was the trade that I actually entered a retracement off of this. And then let me just go to a lower time frame, and try to make it actually look simple. Okay, so this is the trade that I took. As I saw this break of structure, which was the continuation of structure, identifying this imbalance above this high and this supply zone. I was actually expecting for price to come back and retrace and tap into the supply, and then we sold off. So I was actually thinking that the price, as price will come to break this low, we'll be getting a retracement. As we break this low, we'll get a retracement off of this high, then we sell off. But unfortunately, the market didn't give us that, but we are satisfied with what the market is giving us. As price come and tapped into the 50% of the supply, as you can see, that's where my entry is. Okay, so it was simple as that. So now as price just tapped into our area of supply, into our area of demand, sorry. Let's see if price is just tapped the 50%. Price just tapped the 50% of the demand zone, but I was actually expecting price to drop. I'm also expecting price to actually give us a drop to the downside as well. I'm just going to watch what the market does. If the market breaks, if the market gives me another break of structure as it is giving me now, the market is just showing me another Wyckoff. It's a nice Wyckoff scenario that I'm seeing right now on this chart. As you can see that we just had a selling climax, an automatic rally, an ST, and then we had an ST and B. We had our spring, then we had the market break structure here. So probably we'll be looking for something like this, for price to come to go back and and also fill this imbalance that lies above these highs. Okay, and actually clear out all this liquidity. And actually clear out all this liquidity. So yeah, I'm thinking I might get involved in this trade, but I wouldn't falsely enter it. I'll wait for confirmation on a much lower time frame, because I can also see the imbalance that lies here. So this can also be a continuation, okay guys? This can also be a continuation of an already bearish market. So this can also be a bearish market of the, it can be just the market continuation to the downside. Okay, so I wouldn't just enter blindly on this trade. Okay, I'll just wait as the market now is trading inside this range. We are trading in a new range now. Let's delete this range. We are trading inside the new range now. So the price should break either above this range or below this range. Then I'll be looking to get involved, because I'll be having a signal where to get involved in these markets. But so far as I'm seeing this break of structure, this change of channel, this change of character, I'll be looking for price to do this if it's bearish, and then do this if it's bullish. Okay, so guys, I'm not a trader that predicts what the market does. Usually I just anticipate what the market is going to do. Okay guys, thank you for watching this video to the end. If you like the content, please smash on the subscribe button and smash that notification bell, and please like the video and comment on the comment list and tell me what's lacking on this channel, so that we can improve the channel to be a better community. If you want to join my community, guys, please link on the description.